Hello everyone, and welcome to this presentation of the correct way to trade support and resistance. Welcome, my name is Stephen Primo. Thanks for taking time out of your Thursday morning to come join us today. This promises to be a great presentation because a great amount of traders, many of you, probably yourselves included, like to trade with support and resistance, but it's been my conclusion, my observation in the 38 years I've been trading that most people trade support and resistance incorrectly. So what I'm going to be doing today is sharing with you a technique I was first introduced to roughly 30 years ago and show you how you can start implementing it as soon as today if you'd like. Now, welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. For those of you unfamiliar with our website, we are an educational company. That's what we're all about. Even though we provide our students and our members with signals and with strategies to generate those signals, we are really more interested in teaching you how to spot this different market observances, all these different patterns and different setups, so that you can ultimately empower your own trading. It's my belief that the reason why most traders fail is because you're relying on an outside source to tell you what to do, what time frame to trade, what market to trade, how many contracts, what style of trading you should be doing. And that really, in my opinion, is a recipe for disaster. Most traders trade this way, myself included when I first started. You're looking for someone to tell you what to do and when to do it. It isn't until you start to really rely on your own trading decisions and your own trading observations that's, in my opinion, when you start to become consistent. So that's what we teach. That's our philosophy behind specialist trading. That's why I'm going to teach you this really simple but powerful technique today. But before we begin, we are required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique at different markets and different time frames. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Remember, once again, we are required to show you that. So this is our disclaimer. Now, what I'd like to do is just give you a little brief history of when I first started trading. I've made no secret about this. I first started trading on the floor 38 years ago of the Pacific Stock Exchange, and I was a specialist on the floor for 9 years. Specialists are those gentlemen that make markets and stocks. Now, contrary to what a lot of people may believe, it isn't a license to steal. I struggled tremendously my first year or two trying to trade, and I was doing basically everything that I had been taught. I had been doing everything that I had learned in all the seminars and all the books and all the different periodicals and things I was reading, but nothing really was giving me that level of consistency that I was looking for. I was lucky enough to come in contact with some mentors that saw how much I was struggling and were able to teach me the specialist edge, as you see here. That's my goal. That's what I really want to do with my students and my members. Not to simply trade for you, but to teach you the same edge that was able to turn my trading around. And that has sustained me for roughly 38 years now, going to be 39 in just a few months. So my goal, as you see here, is as an educational mentor. I'm trying to teach you so that you can ultimately empower yourself with the same edge that was able to empower me. Now, I want to start out by sharing with you what my mentors told me, which was so powerful, but it really hits home at the basic core of specialist trading. And they said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that, all right? It doesn't really take a lot to pile more and more onto your trading plan. You can put tons of indicators, look at tons of news events, go to tons of trading rooms and chat rooms and think that you've got the most sophisticated trading plan, but it's really entirely complicated. But they also said it's the most difficult thing in the world to simplify your trading. And this, for some reason, is what most traders, myself included, have an aversion to. You feel, or we've been taught, that the more complicated your trading method is, the more valid it will be. And in reality, what I've learned in 38 years is that it's the opposite. Your trading plan will be more valid, will get you on that road to consistency if you simplify it. And what my mentors basically told me is to get rid of the useless noise. Now, this noise can be anything from abundance of indicators to following too many news events to being in too many chat rooms or trading rooms. These things really don't serve to make you successful. What they really do is get in your way. They're more recipes for disaster than anything else. Once again, I'm saying this from firsthand experience. I'm not trying to be condescending or arrogant. This is what was holding my trading back. As soon as I eliminated all these things, that's when I started to become consistent. So remember, it's the easiest thing in the world to complicate your trading. Anyone can do that. You can be trading 2 weeks and overcomplicate your trading. It's the most difficult thing in the world, the most challenging, but the most rewarding to simplify your trading. So I'm going to show you a very simple technique today, but you'll see how powerful it is. Now, here's what we're going to learn today. Remember, we are an educational company, so this will be conducted like we're in a classroom. But one of the first things I want to go over firstly is I know many of you like to have questions, and that's fine. I want you to ask as many questions as possible. But please wait till the very end to ask any questions, okay? We're going to give you a lot of information here to absorb, and many times if you wait for the next slide, your question will be answered. So kindly wait for the next 20-25 minutes, then we'll go into the question and answer portion, okay? The only question I will answer is that we are recording this, so yes, if you have to leave early or if you're having technical difficulties, I see that some people sometimes have technical difficulties, the best thing to do is to kindly start your computer over again. So you may miss a little bit of the presentation, but don't worry, we are recording everything. So you can request a link to this once we've completed. Okay, so why don't we begin? Here's what you're going to learn today. We're going to first start off with conventional trading support and resistance, the way most people trade, myself included when I first started trading. And then we're going to share with you what I believe, what I've come to the opinion of, is the true definition of support and resistance. Once we know the true definition of support and resistance, then I'm going to share with you the correct way to trade it, okay? So because we really know what it's based off of. And you'll have a high probability method for spotting and entering within support and resistance. Then lastly, I'm going to show you a way to even increase your odds with this. This is one more thing in which to increase your odds by trading with support and resistance. Okay, so a lot of information. Once again, if you're having technical difficulty, kindly log out and try to log back in again, or wait and we will give you a link to this at the very end. All right, so let's start out with the conventional trading of support and resistance. This is the way most people trade support and resistance. This is the way I was taught. This is the way I first started trading at the very beginning. Now, here's the standard definition. Support and resistance is a concept in technical analysis that states the movement of the price of a security, and it could be any security, currency pairs, futures, forex market, or stock. But a security will tend to stop and reverse. Very important, stop and reverse at certain predetermined price levels. So we're looking for some type of point where we get to a certain level and then we reverse directions, we reverse trend. So this is the way it usually looks. If we look at this older chart of Apple, I'm going to start off by showing you some older charts for educational purposes, but then I'll show you examples that are as recent as yesterday. Okay, here's an older chart of Apple as we see here. Now, looking at the conventional wisdom here, they would basically say, well, this is support. We've come down and hit this. It looks like we're bottoming out. And conventional wisdom tells us that we are going to stop and reverse, and the trend will reverse. This is what you should be looking for. This worked perfectly, right? It'll work the other way as well. And we're looking at this chart of the E-mini. It doesn't have to be a stock. It could be the E-mini futures. Now, we've come up to some type of resistance. All right, we can't seem to get through that level, and we stop and reverse the other direction. All right, so these are the basic formats of what you're looking for. This is what support and resistance should look like. This is what you're looking for. Now, a lot of people also base this not just looking off the pattern. They'll look at volume. They'll look at what the institutions are doing. They'll look at other technical indicators. But at its most basic form, support and resistance looks like this. Now, this is what I studied. I went to seminars. I read all the books. And then when I tried it, it would work maybe a few times, but more often than not, it would look like this. I would see a chart such as this older chart in TGT. Everything would come into place. All the rules and requirements would be met. We have the support here, so I would go long, and look what would happen. What happened to the support, right? Does it look familiar to anybody? Or in this case with the euro dollar, okay, the euro dollar has been coming down very rapidly. It's been coming down to a lot. Let's say there was some Fibonacci level. Let's say all the institutions were purchasing it. Let's say all the guys in the chat rooms are saying that euro dollar has never been this low before. It looks like it's following some type of support at this level, made a double bottom. All the institutions are here. The volume has picked up. This is a good place to buy. So you step in and buy the euro dollar, and once again, it doesn't hold, okay? Now, this doesn't have to be daily bars. It can be intraday trading as well. We're looking at this older chart of IBM, an hourly chart for you intraday traders. Someone looking at this could see in some chat room or some trading room saying that IBM has to be shorted right around here. We're meeting major resistance. This is maybe where the moon and the sun come into alignment, or possibly where all the institutions are selling. So you sell as well, and guess what? What happened to the resistance, okay? And you'll see this all the way up. There'll be resistance right here, another double top, some more resistance, it'll go through, and even more resistance. So the point is, there is no consistency in trading support and resistance in the conventional manner, okay? It will work every once in a while until it stops working. But see, as traders, we can't rely on things like that to sustain us. We can't rely on things working every once in a while and then not working. All right, they're too subjective. One, trader's support is another trader's resistance. We need things that are more cut and dry. So after years and years of struggling with the standard application of support and resistance and not getting anywhere, I came up with a true definition and application of how you should really be trading this. And once again, I'm saying this from firsthand experience. This is not to be arrogant or condescending or put anything down on anyone who trades support and resistance. But this is what I've really simply found, especially from being on the floor and having access to information about institutions and traders. Support simply means that there are more buyers than sellers. That's all it means. It doesn't mean that those buyers are going to stay there, okay? It just means at a certain point in time, there were more buyers than sellers at a particular price level. That's why the price stayed where it was. I know this from being on the floor. I used to get orders all the time. Institutions, large brokerage houses would give me large orders, hundreds of thousands, and the price would hold there. But here's the only disadvantage. It did not mean that they were going to keep that order there the entire time. Many times that order would stay there for a day or two, and then guess what? They'd call me up the next day and say, cancel the order. We're no longer buyers. So what happened to the support? Okay? What happened to it? Did it just vanish? Did it just shrink? There was no longer any support there. So as you saw in those examples I showed you earlier, that's when the price just went through because there was nothing left to hold it up. And as a specialist, someone making the market, I didn't have the capacity or the capital to keep prices at that level. So support simply means at a certain time and at a certain price level, there were more buyers than sellers. Are these buyers going to stay there? No, they may just not decide to stay after a certain amount of time. Now, conversely, resistance is just the opposite side of the coin. It just means at a certain point, at a certain price level, there were more sellers than buyers. This is what was keeping the price from going higher. The sellers would not let it go higher because they wanted to get their positions in. Did it mean that they were going to stay there permanently and have that resistance for a long period of time? No. They could stay in there for months. They could stay in there for maybe a couple of hours, and then they'd leave. So there's no longer any resistance. So this is really what support and resistance is. You don't have to overcomplicate your trading by going into all this advanced volume analytics, by figuring out what the institutions have been doing and saying, by looking at all these Fibonacci levels and all these different calculations. Remember, it's the easiest thing in the world to overcomplicate your trading. It takes a lot more character to simplify it. So if we're going to simplify our trading, we really see what the true meaning of support and resistance is. How do we trade it? Well, we're going to sell support and we're going to buy resistance. We're going to do the exact opposite of what you've been taught, what I was taught. All right? Every time someone said, well, we hit support here, you're supposed to be buying. Well, there was no consistency in that because the buyers would pull out and it would go straight down. The same thing with resistance. Oh, there's resistance. We're hitting some type of a top. You should be selling. Well, that would work every once in a while, but as soon as the sellers left, price would go straight up. So what consistency is that? Why should we rely on that to trade? Let's do the opposite. Let's know that that support is eventually not going to hold. So let's sell once it breaks and let's buy once the resistance breaks. All right, so here's what our definition of support is. It's not complicated. Once again, we're still keeping things in line with being as simple as possible. Support is just a 3-bar pattern. I know people may like to complicate this and say, oh, it's a fractal. Oh, that's a standard pivot. It doesn't matter. I mean, remember, even in your definitions, keep things simple. We're just looking for a 3-bar pattern where you have a low followed by a lower low, followed by a higher low. So you have this kind of a V bottom here, okay? Excuse me. We're going to sell once this level has broken. It's that simple. Now conversely, resistance is the opposite side of the coin. You have a high followed by a higher high followed by a lower high. You create this kind of an arrow approach here if we drew lines. And all we're going to do, instead of using this to sell, we're going to be buyers once this top is broken. It's that easy. All right. Now I know a lot of you may have trouble with this. It's too simple. You may say, Steve, I was always taught to look at, complex bottoms, complex top for any type of support and resistance. Well, this will make you feel better. Let's look at this chart in IBM once again. This is a 60-minute chart in IBM. And someone looking at this would say, well, Steve, this is what I was always taught. This is the way resistance is supposed to look. Even though I know I'm going to be trading it once we go through there, I need to have a little bit more, detail with this, okay? Well, if you feel you must look at this, all you have to do is go to a higher time frame. This is a 60-minute chart of IBM. If we look at the exact area here on this exact same time period, but we go up to a higher time frame, in this case, a daily, guess what? This is the exact same time frame, but we've gone up to a daily chart. We have a high, followed by a higher high, followed by a lower high. It's the same thing. So there's no reason to overcomplicate and say, well, I need to look back 200, 300 bars to be able to calculate. No, you don't. We just need to look at a 3-bar pattern. It's the same as this example, excuse me, with the euro dollar. Someone looking at this will say, Steve, I've always been taught I need to look at a lot of bars to figure out where support is. I can't just look at 3 bars. All right, well, we're looking at a daily bar here of the euro dollar. If this makes you feel comfortable, all you have to do is go up to a higher time frame. Here's a weekly time frame of this same chart here, but except we've gone into a higher bar chart. We have a low, followed by a lower low, followed by a higher low. It's the same thing. So if any time you're confused with a 3-bar pattern, just know that on a smaller time frame, it's probably meeting your needs. So there's no reason to get nervous or think this is just too easy. Remember, trading is really simple. It's just us that make it more complicated than it has to be. So keep things as simple as possible. So this is the 3-bar pattern we're looking for. All right, so let's look at some examples, and I'll show you how simple this is. Older examples, once again, or actually this is a fairly recent example in WEC. Looking at this in hindsight, well, someone would say, well, Steve, yeah, it's obvious that this has been going up, but how did we know it was going up all the way back here? Well, we just look at these tops here, okay? See, every time we had this higher highs, lower highs, followed by this kind of a pivot top here, this was our area to buy, and that's all you had to do. So every time there was resistance met, all you had to do was buy once it traded above. There was no news you had to follow. There was no economic reports. There was no volume you had to discern, and no figuring out what the institutions were doing. Why overcomplicate it? Just look at that 3-bar pattern that is so-called resistance. Because remember, on a smaller time frame, probably a 60-minute time frame, this same area here of a resistance probably looks like that very complicated type of top you've been taught to look for. Now, if we look at this older chart of the SLV, that's the ETF for silver, we see here that all we have to do is find out where these short-term bottoms were, and once we trade below, there's our sell. Okay? So we're not looking at any support. Someone could look here and say, boy, this is really a nice support level. We made the bottom and we just bounced and held. No, there's no such thing as support. There's no such thing. We know that because there were probably very big buyers here at one point, and then they caused the price of SLV to go higher. But what happened to them here a week later? They weren't there anymore, and SLV went lower. So they say, well, now here's where the buyers are. Now they're buying here. But what happened? Now they're out. So you see how it really is silly to try and rely on that, to try and rely on some certain level, some Fibonacci level, some certain volume. It's silly because those things are transitory. They'll change. There's no consistency in them. Now, this all is very simple. I showed you some very basic formats for trading this, but I'm not going to tell you that it works this easy and it's this constructive all the time. Many times you'll see cases like this in this older chart of Oracle. All right, so you have tops here that were broken, so you buy. But now you have bottoms here that were broken, so you sell. All right, now you're short. So you've taken a loss, but you feel, okay, now it's going to go lower. Now you're short, But guess what? Now the tops are broken again, so you buy again. Now you've had another loss. You're hoping for price to go higher, and it starts to go a little higher. And now you buy some more after the next top is broken. And here's where you're going to be exiting. And hopefully, if you have a nice trend going up, well, you'll continue to be long. But guess what? Now some news comes out, and you exit on the opening of the down. So you've had about 5 trades here, and not one of them has been profitable. All right, this may happen in whipsaw markets from time to time. So we have to ask ourselves, how can we increase our trading odds in every market? Well, we can, and this is a tool I was introduced to on the floor. This is what we want to do. We only want to buy resistance in an uptrend, and we only want to sell support in a downtrend. So that way you'll have much more consistency in your trading. We have to be sure that we're only buying in an uptrend. We're only buying those tops in an uptrend. And we have to be sure that we're only selling those bottoms, those support levels in a downtrend. Here's the only trouble. Everybody has a different idea of what an uptrend and a downtrend is. Okay, everyone is taught in all the different webinars and all the different courses what the definition of an uptrend and a downtrend is. About 35 years ago, I was introduced to a technique on the floor, which is the most powerful technique and tool I know for determining what the short-term trend is. And here's what we're introducing to you today. This is our PET D. It's trading support and resistance with the PET D. All right, the PET D is an algorithm. It's a proprietary algorithm. Once again, I was introduced to on the floor, but what we've done with Specialist Trading and with Pro Trader Strategies, my sister site, is that we've programmed it into a color bar algorithm. So if you see a series of green bars, you know automatically you're in an uptrend. If you see a series of red bars, you automatically know you're in a downtrend. So it's that simple. You don't have to look at a higher time frame. I know so many students are always taught, well, Steve, a lot of times they're not in sync. The 5-minute is not in sync with the hourly, and that's not in sync with the daily bar. Once again, you're overcomplicating your trading. You do not need to look at a higher time frame to tell you what to do on the lower time frame. In my 38 years of trading, I found no consistency in that method either. So don't overcomplicate your trading in order to find the trend. The PET D is the simplest but most powerful way I know for discerning what the short-term trend is. All right, so here's how we're going to use it. We're going to look for price to trade above an all green pivot high, that all green support, or I should say resistance. And we're going to buy when price trades 1 tick or 1 pip above that resistance. So what we were looking for before was this 3-bar pattern. High followed by a higher high followed by a lower high, and we were going to buy once we broke out above that. But we saw in that chart of Oracle I showed you that many times if you're in a whipsaw rangy market, it will really work against you. You'll have nothing but losses. So we want to trade in sync with the trend. If we're going to be buying, we have to be in an uptrend. So therefore we need all 3 of these bars to be green. Bar number 1, 2, and 3 should all be green for us to buy. That easy. Now, what about if we want to go short? We want to sell resist support, I should say. Well, we're going to look for price to trade below an all red pivot low. And we're going to sell when price trades 1 tick or 1 pip below that so-called support. So this is what we were looking for. Remember that 3-bar pattern? A low followed by a lower low followed by a higher low. Okay? That kind of a V approach. But remember, in a whipsaw market, in a rangy market, you'll have a number of losses. So we want to sell only if we are assured we're in a short-term downtrend. How do we do that? All you do is apply the PET D, and you want to see all 3 bars colored red. That's it. So trading is really simple now. Now that we know what the trend is, and now that we've figured out what the true meaning of support and resistance is. It's just a 3-bar pattern that is telling us there are more buyers and more sellers at a certain point. All right, so let me show you some examples using this technique to show you how simple it is to trade support and resistance with the PET D. All right, here's a chart in Urban. As we can see, we are in an uptrend. Someone looking at this will say, well, Steve, this is not hard to figure out. What do I need the PET D for? Because it's easy to see in hindsight that we've been going up. We're in an uptrend. Well, sure. But did you know you were in an uptrend way down here at 33.34? Could you have purchased down here on this little 3-bar pattern? How about right here? Sure, it's easy to see you're in an uptrend up here, roughly about 5 points higher, But what if you had taken advantage down here, roughly 34? Those are your buy points, and you had a nice 6-7 point gain in the next month or so, okay? All the bars are green, even when we had this sell-off. A lot of people were saying, well, Urbit is rolling over. This is now going into a downtrend. As long as the bars are green, the PET D is telling you don't sell. We are in an uptrend still. You should be looking to buy. How about SWN? Okay, we started out up here with green bars, but roughly right here around 46, we had a confluence of red. So well before we started falling out of bed in this stock, the PET D was telling us we're in a downtrend. See how simple this is. So you know when you're in a downtrend, if you're long SWN, you should be raising your stop or exiting the position entirely, or if you're flat, you should be looking to go short. Using this support and resistance technique I just shared with you, if you know you're in a downtrend, you're going to be selling all the support levels, which are right here. So once each and every one of these support levels, so-called support levels, was broken, you could have sold roughly up here about 45 all the way down to 38 in the next couple of weeks or a month. How about on ETFs? This is the ETF of the Russell 2000. As you can see here, we have straight up, straight down, and then straight back up market. A lot of people will say, well, this is a whipsaw market. Not really. As we're going up, you see how the PET D captured all the green here. And then as we started to head back lower, well before the sell-off occurred, all the bars are red. And then we started to get back green again. So you see how easy this is. If we're green, we're just going to buy. If we're red, we're just going to sell. And look at all the trades you could have had here just using this simple technique. There are a million techniques you can use with the PET D. I'm just showing you one today, and that's support and resistance. How about the E-mini? Okay, let's go to a different time frame. Let's look at a 30-minute chart of the E-mini. This is just about this past month. As we can see here, all of the bars are green on this 30-minute time frame. Okay, even all the way back here. Once again, it's easy to look back in hindsight and say, well, yeah, Steve, sure, we're in an uptrend, but it's too late to do anything now. Well, wouldn't you have liked to know you were in an uptrend all the way back here? The bars were all green. So all you had to do was apply this simple technique all the way up using the PET D, okay? We're talking roughly about 40 or 50 points in the E-mini in just a matter of a few days. That's roughly $2,000 to $2,500 per contract. How about if we go to tick charts, okay? Same thing, we have a downtrend with all red bars. Once the trend changes, look where the PET D started turning green, well before we started going up again. And you could have taken advantage by going short while all the bars were red, and then going long again when they turned green. Okay, this was just in a day. And this is, I believe, last week, as we were really falling out of bed here on another 2,500 tick bar chart. Look at all the red bars, signaled red well before the sell-off. And look at all the chances you could have had using this so-called selling on support. Remember, there's no such thing as support the way we've been taught conventionally. It just means at a certain point, there were more buyers right here. Did they stay? No, they left. And so what happened to the support? If the institutions or the buyers can hold up price, but they have the option to leave whenever they want, who are we to try and trade off of what they're doing? It's better just to realize when they've pulled out, know that you're in the trend, and just go against what conventional wisdom is telling you to do. Now let me show you what happened yesterday. Remember the market fell out of bed yesterday? It's down very strongly today, but I took this yesterday, on a 15-minute time frame on the E-mini. Okay. Now you could do this virtually. You can trade intraday on the currency pairs, on stocks, but I just wanted to show you we have a lot of intraday E-mini traders. Here's a 15-minute chart starting, as you can see here, on the 12-2. We kind of opened up flat, went sideways, and started to sell off, but nothing big. Someone looking here that trades conventional wisdom would say, well, Steve, looks like we found support here. The buyers have probably come in. Looks like a little double bottom. Maybe this is a Fibonacci support level, or maybe this is some type of level I should be buying at. And I think I'll purchase right here. Looks like we're going to make a bottom, and maybe there's a pullback. We'll go back and make new highs, okay? That's the way I used to trade. Trust me, it doesn't work. You're basically trying to take your cue from hoping that an outside source, an indicator or volume or some institutions will tell you what to do. It's much easier to take your cue from the market. Now, the PET D is basically just translating what the market wants to do. That's all it does. It just tells you what the market wants to do. It's not telling you, this is where you should buy or sell. It's simply a very finely tuned trend identifier. So as we see coming into the day here, we had the PET D coming into the second yesterday. Well, the bars were green, but at this point they started to turn red. So why would we buy here if the bars are red? The market is telling you, I'm most likely going lower. I'm in a downtrend. So why would you buy? But for some reason, this is the way we are taught. We want to buy at the low and sell at the high. It doesn't work that way. We should be buying higher and selling lower. So as you see here, we are now in a downtrend. This started roughly around 8 o'clock Pacific time. There's no reason we should be even planning or hoping or praying for us to stop here. So if we're using this technique, we want to see here that originally we would have been buying had we gone above, but we never went above. So now we just look for sells. We just go with whatever direction the market is going. And had you taken just the very first trade right here, well, that would have been 17 points by the end of the day. And that was roughly about $850 per contract. If you had 10 contracts and held to the end of the day, that's $8,500. All not based off any news, not based off looking at any chat room or listening to any trade room. All you're doing is listening to the market. Okay? You see, our job as traders is just twofold. We want to listen to the market, have it tell us what it wants to do, and then once we realize what it wants to do, we just jump on board. All right? We don't try to pick tops and bottoms. We don't try to pick levels. Don't overcomplicate your trading. Just listen to the market. It most of the time tells you what it wants to do, and then jump on board. It's that simple. Let's lastly look at some Forex trades here. We're going to look at some even different time frames. Let's look at a monthly chart, a current monthly chart of the Canadian dollar. Once again, looking back in hindsight, someone would say, well, boy, Steve, yeah, easy to see it's in an uptrend now. But what if you would look back at last March in 2014? Well, the PET D was already telling you in March going into May, we're in an uptrend. Well before we had this strong rise in the Canadian dollar. And this is current. This is actually this month right here in November. So all I had to do was look for the tops that were created with all three bars being green, and then you could simply purchase once we traded 1 or 2 pips above. And we can go to this older chart here, the euro dollar. The euro dollar was falling out of bed. All the bars were red. Even way up here at 3,600, they were red, telling you not to buy anything, to look to sell. So using the technique I share with you today, look how simple it is. All you have to do is once those little 3-bar patterns are broken, you just sell. All right, so let's recap before we go to question and answer. We shared with you what most people view as conventional trading of support and resistance, okay? And once again, I know of some traders who do trade conventional style support and resistance, and they do quite well. But trust me, they're probably the 1% of all traders. The majority of traders, myself included, have no consistency when we try to trade support resistance based off of the conventional methods. Why? Because they're too subjective. And because at any moment of time, what is creating support and what is creating resistance can change. And so therefore, there's no longer any valid reason for there to be support or resistance at these places. So why would we use our hard-earned money and bet that it's going to hold there or stop there? It's silly. The true definition of support and resistance is at a certain point of time, at a certain price level, more buyers came in than sellers. This is what created support. And at a certain time, at a certain price level, more sellers came in than buyers. This is what created resistance. Now, the only trouble is they are not required to stay there. So there is no guarantee that that support or resistance will hold. So why should you bet the bank on it? It's really silly. It's a recipe for disaster. Therefore, the correct way to trade support and resistance is simply once the so-called support is broken, you sell. You want to sell support and you want to buy resistance, okay? Because we know they probably won't hold sooner or later. Now, the only trouble is when you get in these rangy markets, usually in the summertime or if you're trading intraday, usually around the lunch hour, you can get whipsawed because price is going back and forth, back and forth. So how do we increase our odds? We only trade this technique with the trend, All right. So you can, if you have a way of finding what the trend is and you feel confident that it really will tell you what the trend is, well, if you're in an uptrend, using your technique for trend, simply be a buyer. Once that 3-bar pattern is exceeded by 1 or 2 ticks, you buy. Now, if you have a technique that tells you what the downtrend is, well, all you have to do is look for that 3-bar technique. Once it's exceeded to the downside, you sell. The only trouble with it is, in my 38 years, I have never found anything that is more valid, that is more powerful, and more simple than the PET D for just determining what the trend is. So the PET D, in my opinion, is the best tool I have for telling me what the short-term trend is. And the beauty of the PET D is that I can apply this technique. I can apply a host of other techniques for trading in sync with the trend. Now, here's what we're offering. Well, before we go into question and answer, we're offering you a chance to get your trading back on track for 2016. We're offering you a great, great deal with the PET D. The reason why I say it's a great deal is because this is probably one of our most popular products at Specialist Trading and Pro Trader Strategies, my sister site, that most likely in 2016, we're not only going to increase the price, but we're also going to be in some type of lease type of format where you probably would only have it for anywhere from a quarter to possibly 6 months before you have to renew. Okay? Now, what we're offering you today is a standard fixed price, and it's yours for life. Right? The PET D will be something that no one can take away from you. And not to worry, because a lot of people will say, well, Steve, yeah, but what if you have an updated version and you have a new add-on where it's new and improved PET D? Trust me, I've been trading the PET D for nearly 38 years now. So far, nothing has changed. We haven't changed anything. The only thing I have done is created a color bar algorithm so that you don't have to sit there and figure out this proprietary algorithm and formula each and every bar. It's automatically done for you by changing the bars either green or red. So with the PET D course, remember, this is a roadmap for any market. This includes the add-on that will automatically change your bars from green to red. It comes also with 2 continuation trading techniques and 2 pullback trading techniques. All right. We also give you a stop technique for trailing stops. This will work in any market, any time frame, okay, and any strategy. So even if you say, well, Steve, you know, I realize this support and resistance technique, it's interesting, but it's not what I trade. I have a strategy I feel pretty confident about. Great. You can apply the PET D with your strategy. In other words, if you get a sell signal, but the PET D is coloring the bars green, I most likely wouldn't take that signal because you're going against the trend. The PET D is just a very finely tuned trend identifier that you can apply any strategy to. It doesn't have to be one of yours, it can be one of mine, it can be something that you've purchased from another educator. And lastly, you get full personal correspondence from myself. So you're a lifetime student of mine. Any questions or any techniques or any ideas you may have about applying the PET D, you can always contact me, okay? And here's one thing I want to share with you. A lot of people will say, well, Steve, this is all well and good, but I'm really a long-term trader. I like to just really invest in my IRA, my portfolio. Well, let me show you something. Let's see how we could apply the PET D for longer-term time frames, because it's just not for daily bars or intraday bars. If we look at this monthly bar of the S&P index, this is a monthly bar. Each one of these bars equals a month going back 20 years, back to 1995. You see there in the lower left-hand corner. All right. If we notice that, we see a lot of peaks and valleys in the S&P index. You see we went straight up until we reached the dot-com crisis in 2000, and then the market literally fell out of bed. We had a really strong crash there going into 2003. Then the market firmed up and went all the way up until 2007, 2008, and then the banking crisis hit, the financial crisis, and guess what? Another crash. It really messed up the economy. It was really terrible for people working, and the markets fell out of bed. They didn't firm up until roughly 2009, 2010, and the market has continued to go up. Now, wouldn't you like to know when we're going to hit another top? Okay, how could you have, not a tool or something that's telling you to get out the exact top, but at least give you some type of warning somewhere either, at these levels or even somewhere at these levels where you could have gotten out before the bottom fell out? All we have to do is apply the PET D. The same tool can be applied. And as you can see here, when you have an abundance of green bars, it's telling you that you're in an uptrend. Anytime you have anywhere from 3 to 5 bars, it's telling you the trend has changed. So we had, a couple of red bars here. That wasn't enough to tell us to get out, and then the market continued. But once we had 3 to 5 bars, look what happened. The trend really fell out of bed. We have 3 or more bars turning green. That's telling you to get back in. 3 or 4 or 5 bars here in 2007, 2008, you would have bypassed all of this crash. And then 3 or 5 bars here in 2009, 2010, you'd still be in the market. Okay? So this is the beauty of the PET-D. It can be used in any time frame, any market, in any direction. It truly is a roadmap for any market. Remember, it's not a system. It's not a strategy. It does not come with any statistics. It's like saying, well, give me the statistic of the 20-period exponential moving average. It's not that you can only give a statistic for something that's a system. This is just a trend identifier, but it's the best trend identifier I know of in my 38 years of trading. I literally use it every day, and perhaps since the past 38 years of my life. So once again, if you want to get your trading back on track for 2016, if you're nowhere near what you thought you'd be at the end of 2015, here's your chance to be a lifelong member of Specialist Trading and have the lifelong PET-D tool. We're offering this at $24.95. This is a PET-D full application and course, and the best thing is we're offering payment plans. So if you can't come up with that sum, you can put together a payment plan, and you can be up and running ASAP with the PET-D. Now here's how to take advantage of that offer. Remember, once again, if we happen to go into a leasing arrangement or we happen to increase the price, you're going to miss this great discount here. This is yours for life. Contact Pro Trader Strategies. You can email them at trading@protraderstrategies.com. You can also call them directly for a payment plan set up at 310-598-6677. Or if you see that link at the very bottom, you can just simply copy and paste that. Okay? And remember, this is for lifetime access. And here's the link at the very bottom, but you would have to copy and paste that onto your browser. If you go to the chat box on the far right-hand corner of the GoToWebinar page, you'll see they've posted a live link there. So all you have to do is simply click that on, and it will take you to the sign-up page. But remember, if you want to get a payment plan, all you have to do is call or email Pro Trader Strategies, my sister site. They promote and handle all my courses and strategies. They can set you up with a payment plan so you can be up and running right away, even with a small deposit, okay? So I'm going to leave this information up here while we open up the question and answer box. And I want to thank you so much for waiting on the questions, and I'll open that up right now. Let's see. John asks, what determines the colors of the bars? That's a good question, John. Remember, first of all, this is a proprietary technique. In other words, we're keeping it in-house. But what I can tell you what it's based off of. It's based off of momentum. It was a formula I was introduced to on the floor of the exchange. And when I was first introduced to it, we had to, do it by hand because we didn't have high-speed computers or programmers. And it was very difficult, so we could only use it for daily bars. But with high-speed computers and programmers now, we've color barred it into a color bar algorithm, so you just automatically have to look at the bars. Now, I can't give it away because we really want to keep it in-house. We have a number of people interested in this formula. We have hedge fund traders. We also have tons of people on the internet, I'm sure if you do a Google search, who swear they figured out what the PET-D is. Now, trust me, no one has figured out what it is so far. And the point is, it doesn't matter even if you knew what it was or stole it. It doesn't matter. The point is, I can almost guarantee that you'd lose money anyway because you don't know how to apply it correctly. So that's what this course gives you. More than just a, private algorithm, a formula, you're getting 38 years of instruction for someone who's been using this, who knows how to use it properly. Like I said, I can guarantee if I gave it away for free, most people would lose money because they wouldn't know how to use it. They'd use it incorrectly, and they'd say, this doesn't work, this stuff doesn't work at all. The point is, you have to be taught by someone who's been trading with it for 38 years to see how to apply it correctly. That's what you're getting in the course, okay? Alper is asking about a recording. Yes, just simply contact Pro Trader Strategies. They will supply you with that. Let's see. There's a student. Punel is a student of ours. He just purchased the PET-D with one of our strategies, and I hope he's doing well. Yes, we have a number of people who are students as well as people who are just starting for the first time. Brian is asking, how does this link, or I assume you're saying, Brian, how does it work with Strategy 4? Well, as Punil just said, he has purchased our Strategy 4 and Pet D course, which is called our Dynamic Duo. This is one of the, I would probably say, the most popular courses we have at Specialist Trading next to the Pet D, because it incorporates the Pet D with one of our most consistent strategies. And once you put these two together, it's almost like you just ramp up your odds for consistency tremendously. It's just so consistent because you have two already consistent techniques that you're putting together, and they work really well. It's our most popular as well as a consistent technique. That's called our Dynamic Duo. But right now we're just offering, that's a totally different package. If you're interested in that, you can contact Pro Trader Strategies. But right now we're just offering the Pet D by itself, okay? Let's see, what platform can I use it on? It's a good question Brian's asking. The Pet D works on MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and you can also apply it to Thinkorswim. But the Thinkorswim users is a little bit of things we have to alter about it. What you want to do with Thinkorswim is you use their live free stock data that you get with Thinkorswim, and then we apply that to a NinjaTrader platform, because Pet D at the current time cannot be processed onto Thinkorswim. So it's very simple though. Our tech support just simply puts together a NinjaTrader platform for you. They hook up and connect the data that you're using with Thinkorswim, and you can see the indicator in the tool right there. So you can have both running at the same time, Thinkorswim and NinjaTrader, and you can look back and forth to see what the Pet D is doing. It's really simple. Okay, and we have a great tech support department that can put that together for you very, very easily without charge. Let's see here. Tom asks, do we have to program the Pet D into our charting platform? Well, once again, it's just simply an add-on. All you have to do is upload it onto your platform. But the minute you do that, once again, MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, once you upload the add-on, it will automatically, if you turn on the tool, it will automatically make the charts either green or red. And one thing I want to explain too, I'm sure some people have questions. This is not a tool that repaints itself. So in other words, once a bar closes, let's say you're looking at a 5-minute time frame. Once that bar closes, if it closed at the color red, it will stay red. It doesn't repaint itself. So you don't have to worry about going back and saying, hey, what happened here? I thought this thing used to be green, now it's red. Same thing if you're looking at a daily bar. Once the day closes, and let's say the day was green, it's going to stay green. So this is not something that recalculates, regenerates itself. All right, now while the bar is open, if you're kind of in a whipsaw market, you may see from time to time, very seldom, not that often, but going back green, red, but really not that much. Pretty much you're in a particular zone or benchmark. That's where you're going to stay in that color, okay? Ed is asking, so the Pet D has no black or neutral colors? No, it doesn't. It has no black or neutral. It just is either red or green or red or green. Now what you wanted, there are many ways to use it and apply it. See, this is where I say, well, people, even if I gave away this for free, people would most likely lose money because most people don't know how to apply it. In the course, I give you 4 trading techniques on how to apply with the Pet D, as well as a trailing stop technique. Now, these are just techniques. They're not full-fledged strategies. One of our best tools is applying the Pet D, as I stated, with Strategy 4. But you can also apply it with Strategy 5 of ours. You can also apply it with Strategy 1, Strategy 3. There's tons of ways to use it. You can apply it with one of your strategies. But we help you. Once you purchase the course and become a member, a student of mine, I work with you and show you what the best way is to use it and how to apply it. Okay? It's a great, great tool. I wouldn't go a day without using it. Let's see. Roberta says, I also just purchased this product. It's wonderful. Oh, thank you, Roberta. Thank you so much. She's saying, is Strategy 4 slow to react to market conditions? Well, Strategy 4 is based off entirely different format. Strategy 4 is a pattern recognition strategy. When I first was introduced to Strategy 4 on the floor of the exchange once again, it was designed to capture these quick movements and trading, but at the same time we're looking for a specific pattern to generate. So if we don't see that all the rules and requirements met of that pattern, we cannot take the signal. So, it does have a high level of consistency, but if you're looking for more, a lot quicker usage of strategy for it, go to a different time frame, go to a smaller time frame. A lot of our people use it for daily bars, but we also have people using it for tick charts on E-mini and on stocks and on the Forex markets. So it works in any market, any time frame as well. And once you apply the PET D to it, boy, you've increased your odds for success even more. So even though we're just talking about the PET D, I assume people out there are listening. You can see there's a number of people who also apply it with other things as well, and you can see how it really ramps up your odds for success. But thank you, Roberta. Thank you so much for your patronage, and thank you for the kind words. Now remember, if you're interested in really getting to that point that you had promised yourself in January 2015, and you're not there yet, I really suggest getting involved with our PET D course. It is a roadmap for any market. You saw in those examples I shared with you how someone looking in hindsight would say, well, Steve, yeah, it's easy to see we're in an uptrend. Looking back 3 months, we've been going straight up for 3 months. But if you look back in the far left-hand corner, you saw that the PET D was coloring those bars green well before the market took off. Same thing with the downside. I showed you even a 2500 tick bar chart of the E-mini, how the bars were colored red well before the market fell out of bed. Same thing in the currency pairs. So if you're looking for a roadmap to get you in sync with the market, remember, as I stated in the beginning of this presentation, our job as traders is only twofold. We want to listen to the market and have it tell us what it wants to do, and then we just jump on board. In my 38 years, the PET D is the best instrument I know for listening to the market, because it basically, all it does is just translate what the market wants to do. Okay? Now, it's not a system. It's not a trading strategy. It's just a finely tuned trend identifier. It's the Primo short-term trend identifier. So it really is a great, great tool. I wouldn't go a day without it, okay? Ice asks, what broker do we go to? We have no trading yet, no trading experience. Well, we're not a brokerage firm per se. We really don't, focus that on that much, Ice. What we do is we're an educational company. Our job is just to teach you how to trade. We can kind of steer you in some direction, but that's not really our job. We're really not brokers. We can kind of quote what all of our other students are using and what they've had success with. But we're not affiliated with brokers per se where we tell you what to use. We really just teach you. But remember, teaching is what it's all about. And as long as you know what to do and how to trade, you can be with any broker. It's up to you. The broker is just the person who, the brokerage person you just pay to enter your orders through. But they're not going to decide for you how to trade. You should be deciding for yourself how to trade. Okay. Is the PET D able to accept different look-back periods? If so, do you suggest in the course what look-back periods to use when? Well, the PET D is, this is from Ed. Ed, the PET D is pretty much set in stone. It's standard, trend identifier. Now you can change the time period in terms of the bar chart you're looking at, but you can't alter the settings of the PET D. Okay, remember, this is a proprietary algorithm, so we don't change the look back, how many bars it looks back to come up with the calculations. That would mean that we'd give away the rules. We're really not doing that, and there's no need to. Remember, all you need to do is apply this, and it will tell you what the market wants to do. It's literally the market telling you what it wants to do. So that's all you have to do. Now, it's not a system. And it's not a strategy, so don't look at it that way where you're altering it to come up with a specific entry point or sell point. It's not meant to be used in that particular way, okay? Remember, if you want to take your trading to the next level in 2016, if you don't want to be here at the end of 2016 saying the same thing you're saying now, or boy, I thought I'd be doing much better than I am, I really feel strongly that the PET D will get you on that road, okay? I use it on a daily basis. As you've seen here, unsolicited, we have people in the webinar today that are saying how great of a tool it is, how it's really helped them, how they've never traded before and they're already using it. So it's really a great tool. And I think the best thing, once again, about this is not only the high level of consistency, but you're also getting 38 years of experience as your personal mentor. So this is not just something we're giving to you and saying, good luck, just read the material and let us know how it works. You can correspond to me whenever you like. I was answering emails and answering questions prior to this presentation. So I am your personal mentor, someone who's been using this. I'll show you what I feel is the best way to use it for your personal needs, okay? I don't think you can get that with a lot of other courses. We really, as you can see, specify and put a lot into detail into teaching and education. We're not going to tell you how to trade, what market to trade, what the best time frame is, what the best market is. We don't believe in that. We feel that you have to make that decision. What we do is just provide you with the tips and techniques and strategies so that you'll be comfortable in making that decision. Okay, that's what our job is as educators. Go back, do a Google search on us, on Pro Trader Strategies, on Specialist Trading. You'll see how many satisfied clients we've had, how many satisfied members. We have people trading the Pet D who just started trading just a few weeks ago. We also have hedge fund managers trading with the Pet D. So it doesn't really matter your level of experience. All that matters is that you want to come on board with us, okay? All right, in conclusion, I want to say thank you so much for attending today. I really wish you all the best of luck trading. I really look forward to all of you becoming students of mine and members of the Pet D course. Thank you so much. We'll see you next time. Bye-bye.